morning, everybody. It's Monday, December 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the comment section. I'll be more than happy to get to those during the show. You can also reach out to us at info@agyield.com at any time. Real quickly here, overnight markets had March corn down 1.5 pennies at 481.5. January soybeans were up 1 penny at 13.16 3/4, and March Chicago wheat was down 8 3/4 at 620.5. Going to get the conversation started this morning. I know Ben had some thoughts. He was looking at March corn chart, and with anything, we look at charts because we need to. It's a necessary evil in our business. But I think Ben had some good thoughts here this morning, and I'll kick it over to the guys.
Good morning, everyone. A lot of chatter out there about a developing head and shoulders bottom formation in March corn, and it certainly is developing. It looks fairly symmetrical, but I think that you have to be very conscious of the fact that it's not good until it's proven good or until it's proven bad. And we tend to lean towards confirmation bias on this before it's ever given us any data of a breakout. So kind of looking at it, I think that more often than not, it's something that's wildly mistraded because people want to get in front of it. And the best thing to do is to kind of let it materialize and see what it wants to do, because it will be a choppy trade, I think, moving forward, trying to figure out what it wants to do. And it would need a strong close above 92 with some extension, 492, in order to verify. If it were, it would be right in line with a typical 10% bear market rally off the lows. I wouldn't get greedy for the last penny if it came. I think it's kind of suggests to what we've been talking about before, that thin holiday markets can give you some opportunity at times, and it probably will be short-lived and maybe not fully perform, because we do have a fundamentally oversupply situation in corn. Conversely, that same pattern, if it were to take out the left shoulder, would be a very strong sign that it's not performing. And if it were to take out the lows down around 70.5, most people believe that at that point it's negated itself, and you could expect the same sort of move to the downside. So it's critical not to be emotional in cheering it on when it's going through it, because it hasn't given you verification that it's good or bad. And I think it's one of the it's very easily recognizable. Most people who trade know what one of them looks like. Most people that are buyers and sellers of commodities know what one looks like. It's very simpleton, and we have to be careful to not completely hitch our wagon to that, because it has not verified anything yet. So patience is important here, and humility if it goes the other way. So I think it's just something that we have to be careful. We get excited when we see these, but it hasn't done anything yet to materialize into something that becomes an actual in-play chart formation.
That's good stuff. Dustin, I noticed we got the CFTC data there on Friday. Looks like funds were small buyers of corn, about 7,000 contracts of corn. They sold about 6,000 contracts of beans and bought quite a bit wheat. 29,000 contracts of SRW. What was your overall impression when you looked at that data on Friday?
Yeah, so if you look at the position funds were holding going into the last couple of weeks, they obviously had a very, very large short covering position for wheat, right? If you just dive into managed money alone and do futures and options combined, they liquidated about 36,000 contracts of their short positions, and then about 9,000 contracts of their long positions on the other side for those holding the long positions. That's a big, net short liquidation. I think the funds obviously got caught a little bit prior to those Chinese purchases of SRW wheat. We had spreads extremely wide with VSR kicking in, and then reasons to be short, and then reasons for them to kind of buy out of those shorts once something changed in the market for them. I think the same thing happened for corn to a smaller degree, right? They kind of bought out of their short corn position to a smaller degree over the last couple of weeks. And then, of course, the bean position was their long position going into that 2-week period prior to that. So net soybean position liquidated 8,000 longs on the long side. Not a huge number going into last Tuesday, but I do think that money flow and fund flow clearly have had an impact on markets recently. And the Chinese buying of SRW wheat was a surprise to them.
I would add to
also saw the go ahead, Ben.
I was just going to add to that the buying in corn. We saw a short covering bounce 6, 7, 8 weeks ago, and it'll be interesting to see how they handle the remainder of their short because they continued to buy even though we declined off that 50-day moving average. Whereas a lot of times they don't really start to exit until they breach certain levels and moving averages. So they've been quietly down here trying to cover what's been a very good position. Doesn't mean they're going to cover all of it, but I think it is worth noting. We saw, the volatility in wheat when they hit the eject button, what it can do, and it doesn't feel like, I think keep your eyes and ears open for the potential of any sort of big purchases in corn. I think that watching wheat do what it did, they might get a little bit itchy there as well. But again, you don't know until it happens. It's behind the veil. So.
Yeah, absolutely, guys. We also, last week we saw NOPA come out. It was the second largest crush for any month on record at 189.038. Dustin, I thought you made a good point too that we did see an uptick, for the first time in 7 months of oil stocks as well. Got a little breakdown of that report for the folks out here.
Yeah, so it was like about, I think it was 3 million bushels above the average guess, but basically it's second most on the record because October was the record, right? It's our increased crush capacity that we're now seeing show up in the numbers. We've got Shell Rock open, Spiritwood, is about to open as well. So we're definitely reaping the benefits of expanding crush, and we're starting to see that. And we've also seen, declining oil share stocks or oil stocks up until this report. So the prior 2 reports to this, big surprise drawdowns of oil stocks. And then, of course, we finally saw an uptick in oil stocks when we expanded crush. So I think that was, something, we ultimately needed to see. We were getting down to pretty low levels there. But that is the one shining light for beans has been the expanded crush capacity. We talked a little bit about it last week about the fact that crush margins had dropped substantially recently. So I think crush, we are still penciling a record crush for total demand this year, despite very tight U.S. supplies going into September 1st, 2024. As of right now, we're still, projecting a record crush, but really kind of depends on exports too. If for some reason, I know there's still a lot of debate on both sides about South American weather. Looks like they are going to get some rains here at this critical time in Brazil. Whether or not they're going to have that 150, 160 million metric ton soybean crop again this year to compete with on exports. So I think the direction of beans is largely going to still be dictated by export expectations right now. So we're just continuing to watch South American weather. It's a very critical time to see that. And we'll see if those rains verify in the 7-day.
Yeah, by all estimations, I was going to go there next, Dustin. I mean, it looks like kind of the northeast portions of Argentina, southern parts of Brazil, look to be okay. And it's going to be the central part of Brazil. If these rains verify, they could be pretty significant for the bean action. Would you agree?
Yeah. And, like Crop Profit, for example, they've got rainfall for the next 7 days at 104% of normal.
Wow.
For a weighted average. So that, some areas getting heavier, some areas below normal. But as a whole, it's a big country, obviously, but 104% rainfall on a production weighted basis is pretty good. And so I know there's a lot of people that continue to kind of, talk about the bullish story for beans in Brazil. It definitely started off very dry, and but it is, like Justin's been mentioning, it's a rainforest, and it was early. So if we're starting to get rainfall in December and then January, it might not be a disaster as everyone kind of had predicted to start the season.
Sure. We got a couple minutes here, Ryland. I know we got a bunch of livestock and hog reports that are going to be on the docket here this week. Wanted to get your opinions on those reports, but also just on those sectors as well.
Yeah, thanks, Dan. A little bit of optimism, as we kind of stated yesterday in the live cattle market, in the feeder market. We have started to bounce a little bit, and of course, everybody's looking at more of the technical aspects of the market right now, just because it looks like you could really kind of take off in some of these price levels. There's some pretty big gaps on the chart here. January feeders, for example, is a huge gap still left from a couple weeks ago at 242.32. So that'd be a significant retracement, of this move. So I know that's what a lot of people are eyeballing. I think we would need to see a little bit more support from the fundamental side, which we are seeing too. We did see a little bit of an uptick in the index. So it looks like we've kind of reached that level of potentially of equilibrium in the feeder market versus the live cattle market. We're starting to see a little bit more action on the buy side. So we'll keep an eye on that. Right now, funds are still kind of short in the feeder market, as well as the CFTC data showed on Friday. Still short 1171 contracts, and that was up just slightly as of last Tuesday. And I imagine the kind of late wheat price action probably got them to lighten up on that net short. Cattle, they're still long, 22,706. That was down 5,017. So looked like we definitely saw some short covering in the live cattle market towards the end of the week. We got the cattle on feed report on Friday. I think all the eyes are going to be on the placement number, expecting probably 2, maybe even 4%, still above last month. So we'll see how the average analysts want to, how they kind of view these reports as well. And then hog and pig, I don't think it's going to be too big of a deal yet. We'll see what the average analysts want to say. We've pretty much been overkilling the report in general, and I think just the surprise in the supply situation will probably be on the breeding side of things. So we'll see if there's any kind of expansion that we need to worry about that would kind of take prices down here in Q1 and Q2. But I think for right now, we've got a big supply to deal with. We got really heavy hogs coming to market, and just overall, it seems like we're pretty saturated right now. Seasonally, we do bounce. We've had 2 good days in a row here, and it looks like we're getting some of that holiday demand to kind of show up here on the cutout side. Bellies were up pretty big here on Friday. So especially something like the live cattle, we would expect a pretty volatile trade in futures before that report this week. Directions kind of set for up to start. So we'll see if there's any more follow through here.
Very good. We appreciate that, bud. Ladies and gentlemen, we've had a number of folks reach out. And so with the comments section, there were some questions on folks that were clicking on our YouTube link and just exactly what the process was in terms of how to leave a comment or a question. And so we've brought our favorite marketing manager in here this morning, Jack Coakley, to do a brief presentation just on how it is you can get yourself set up to interact with the war room, and if you have any questions or comments, how that process works. So we'll shoot it over to you, Jack.
Thanks, Dan. I'm going to wipe the rest of you guys off of the stage because, I'm the star of the show. So I'm here today to talk a little bit about, I guess you guys are back. Anyway, I'm here to talk a little bit about the kind of the YouTube process, the ability to log into a YouTube account and be a part of the discussion here in the war room. To get that started, it really starts with only those who are logged into a YouTube account can post during the live chat of the show. So to do that, you first need to create or log into your YouTube account. This is super easy and most user-friendly through the YouTube app, which you might or probably already have downloaded onto your phone. I got a screenshot right there. If you don't find it on your current phone, just go ahead and go to your app store and search for YouTube. From there, once you open it, the app will then prompt you if you have a Google account, if you have a Chrome account, or a YouTube account that you've maybe forgotten about. Google will list out all of your potential emails that are already connected, like so. So if you see one of your emails that is already connected to YouTube, you go ahead and click that button. If not, there's an add account button right at the bottom there, which will turn you over to this window. So this is when you will sign into your Gmail account. Or if you need to start from scratch, you go ahead and click that create account button right there at the bottom. And once you've gotten through that process, it will finalize you on this screen where you will choose the details of how you will be displayed on YouTube. And then you click create channel and you're done. So yeah, it's pretty straightforward. If you have any questions, feel free to reach out to info@agyield.com. I'll be more than happy to help out anyone who's having any difficulties. But from there, as soon as you have live chat abilities and you're signed into your YouTube account, you're one button away from thanks for this. I got to put this comment on the screen. Thank you, Taylor Swift of the War Room. So if you have any questions or if you just want to talk about how great I am,
it's so true.
Yeah, I had to leave it here. So
I guess that makes Dan Travis Kelce.
Yeah, right. I was just gonna say that.
Oh, Jack, we're gonna go places with this one, buddy. Okay, well, it's good to hear from Nick out in Indiana this morning. I'm glad you're awake here on a Monday morning. Real quick, I don't even know how to speak anymore. Just real quick, came into the open here. March corn's down $1.75, 481 1/4. Jam beans are up to 13.17 3/4, and March Chicago wheat is down 8 at 621 1/4. Streaming live every day, folks, on YouTube, X, and Facebook Live. We will be back same time, same places tomorrow morning, 8:15 Central Time. And we certainly appreciate everybody logging in, and we look forward to talking to you tomorrow. Have a great day.
Thanks,
Dan.
Thanks, man.